Envision what your growth is going to be, write it down, get your team to buy into it, and keep moving forward.
Welcome to the Real Estate Executive Thought Leadership Podcast, a fast-paced show featuring focused insights from executive thought leaders in the real estate industry.
For episode 11, we speak with Sean Dalfen. He's the president and chief investment officer of Dalfen Industrial, a leading Dallas-based last-mile industrial development and investment firm. Sean will share with us why infill industrial developments are a critical component of the supply chain and an asset class with universal demand drivers. We'll talk about his special love for growth markets and belief in their long-term story. We'll also consider why it's important to own outcomes, how the job of a leader is also that of a problem solver, marketing strategies to generate deals and capital, and how it can take 20 years to build your name, but only one deal to screw it up. Let's get started. Hi, Sean. Welcome to the show.
Thank you for having me.
So let's get into your professional background first. Please tell us a little bit about your experience in commercial real estate.
I learned a bit about the business through osmosis and hearing it a lot from my father. My father got into the commercial real estate business in the early 90s, and it was something that intrigued me. When I was in university, I started a software company and ended up running that. I eventually got out of it. I parlayed that into real estate, started investing in properties, and I also started working in brokerage. I worked for NAI in Montreal. And I was quite successful. And maybe that's because I was buying a lot of the properties I was finding. That's my early start in commercial real estate. And I guess I got right into buying when I got into it.
What type of assets did you start out with?
The first asset that I bought was, actually I bought into a self-storage center. But my first, I'll call it real deal, that was my deal that I did from start to finish, was quite a large land play. We were going to build an industrial park, but I actually believed that we could convert this land to residential because there was a great demand for residential in this particular area. And we were able to convert that land to residential and make a fortune in selling it off.
So share a little bit about your education.
Now, I don't think it played a role in the success. I guess education is good, period. But I went to McGill University in Montreal, and I also did semesters abroad at Tel Aviv University in Israel. I actually left in my final year of McGill to run a business. I don't recommend that for everybody, but for me, it was the path I took.
You specialize in infill. What appeals to you about that? Can you tell us a little bit about infill?
What infill is for us is, we call it last mile. And so what we want to ensure is that the property is within a 3 to 10 mile radius of the key population who is going to be receiving goods that they are ordering online. Alternatively, it's within a major logistics hub, and it can also service the surrounding business communities, or it's in very close proximity to a key workforce demographic. And we do that because in today's day and age, if you're delivering a product the same day or even the next day, if you're not in close proximity within about 3 to 10 miles of the population that you're delivering to, for the most part, you're not profiting. And so that's what makes our buildings so important in the supply chain.
Let's talk about professional direction. What does success look like for you in 5 years?
In 5 years from now, we'd like ourselves to be the dominant player in the market, at least in the North American market, for last mile industrial. And we're well on our way.
What books or educational resources are you engaging with?
Our company runs on a philosophy of extreme ownership. And there was a book by Leif Babin and Jocko Willink called Extreme Ownership. And it's actually, call it our company's Bible, for lack of a better term. Everybody who joins the firm, or even who has been at the firm, is required to read that book and required to operate with the mentality that no matter what is going on in whatever problems you're dealing with, you have to own your side of the street, and it's always your issue. So, for example, if you couldn't get something done because your supervisor didn't give you approval to act on it, it's your fault. Why is it your fault? Because maybe you should have voiced your opinion or your concern earlier. Maybe you should have learned a better way to express that concern to your supervisor. So it's always about self-betterment, but owning the outcome, as opposed to what we tend to do naturally, which is blame the outcome on someone else if it's not an outcome that we like. And so I would say that that plays a critical role. I'll also say that in my own personal story, Tony Robbins played a key role. I listened to all his well, then it was tapes and CDs for his Unleash the Power Within and all his stuff like that. So that was key, at least on my personal side. But we believe in personal development here, and every person in the company has to, whether it's taking a course or typically taking a course or reading a particular book, they need to do something in the form of self-development, and it actually goes into their compensation as well as their goal structure.
How do you decompress from daily business?
I get home and take care of my kids, and then spend some time with my wife and answering emails. And I will go fishing and work out and do stuff like that as well. But I would say that my life is not as balanced as maybe the millennial concept of balance is today.
So let's talk about your company and some of the trends you're seeing. What does Dalfen Industrial offer and who do you serve?
We serve everyone from the general customer like you and I to massive businesses. And what we offer is top quality locations, professionally managed buildings, and best in class buildings that one is able to fulfill orders to the populace within a 3 to 10 mile radius. And so we offer a critical component of the supply chain. And if you want your goods quickly, I mean, the properties that we own are the places to fulfill those orders from.
Can you share just a little bit about the history of the company?
The company was founded in the name Dolphin, it was actually Dolphins Limited, was founded in 1935 by my grandfather, Joseph Dolphin, who came over from Europe to East Coast Canada, started selling clothes to farmers on a horse and buggy, managed to open some retail stores in the maritime provinces of Canada. And in the early 90s, my father, who was then president, made the bold decision to close the retail business and start a new business, which was commercial real estate investing in the US. In the mid 2000s, I joined with him. And at that point, we made the decision to sell the existing holdings because we felt the market was too frothy. Tenants were having some trouble paying rents and cap rates continued to compress. So from our standpoint, it wasn't a prescient move, it was a logical decision. It was time to sell. We couldn't buy and we felt the market was too hot, so we sold. So from 2006 to 2008, we sold the majority of our portfolio. And in 2009, we focused exclusively on one asset class, and it was our most successful asset class. And quite frankly, industrial itself is the asset class with the most demand drivers. Everything in my office, your office, our homes, what we're wearing, all came from an industrial building. And you don't have any other asset class with that many universal demand drivers. And so we decided to focus on one thing and do it really well. And that's what we did. Fast forward to where we're at today, and we're one of the largest buyers of infill industrial in the country.
What geographic markets are you operating in and what are your plans for growth?
We're pretty much nationwide in all of the major metros. California is one of the only markets that we haven't tapped yet. Call it a top tier market, but we intend to do so in the future. Our primary focus and where bread and butter is really in the growth markets. And those growth markets include Texas, the Carolinas, Florida, Arizona, Nevada. We focus primarily on growing our footprint in these markets because we believe in the long-term story of them. There are other more mature metros like the DC corridor and certain select markets in the Midwest, Ohio, as well as Chicago, as well as the Northeast, which we will acquire and build assets as well. But we have a special love for the growth markets because as long as someone smarter than me said a long time ago, as long as it's cold in the north and it's warm in the south, people will keep moving to these markets.
What trends and challenges do you see in the development industry and how are you adapting?
The challenge in our industry in particular, from a development standpoint, is finding high quality, reasonably priced land that's infill. The problem with finding sites infill is historically it didn't really make sense to build industrial infill because there were higher and better uses for land. You could build multifamily, retail, office, etc. The rents in industrial simply didn't justify putting up a building there. And so land is scarce. And so the difficulty that we have in many markets is finding that right piece of land.
How do you ensure stable returns for stakeholders?
We stick to our fundamentals, and it's a constant focus on striving for perfection and understanding that we won't ever hit it, but that there's always something more to be done. Not stretching ourselves by trying to make a deal work which doesn't make financial sense. We're not going to put out money for the sake of it. We're going to buy and build buildings because they're the right financial decision. And we're going to be conservative in our underwriting, which is why we've thoroughly outperformed our projections for many, many years, and why our returns have exceeded 20% annually for over 13 years.
Are environmental and operational sustainability part of your strategy?
Sure, they definitely play a role in our strategy. We would love to have green buildings. However, it's not always feasible, but energy efficiency, whether it be the lighting that we use, or whether it be looking to put solar panels on some of the properties, they definitely play a role. Not only do they help with the efficiencies of the building, but they also help attracting the best tenants. And that's our focus, is attracting the best tenants. We want to have the top quality building that meets their needs as well. And so ESG is important to us, and it happens to be important to them as well.
Okay, let's get into leadership. How would you describe your leadership style and how do you motivate your team?
We have what we call a healthy debate environment. And so our belief here, and it's something that I've tried to instill on the culture, which is there's no wrong question and there are many right answers. If what we try to do is always look for the holes in any, let's call it, investment that we have, and what can go wrong. And if you have many heads thinking like that and afraid to express themselves, then you're going to come up with the best solution. We also believe in being creative and thinking outside the box. So what we do is we have bi-weekly company meetings, and everyone's opinion here is important. I don't care if they're a temp or an intern. If someone believes that they have a suggestion of value, we ask them to voice it, irrespective of what department they're voicing it on. They could be in acquisitions and they may have a suggestion on accounting or vice versa. Everyone's opinion is important, and it's in taking all those opinions to heart and being flexible and recognizing that sometimes the best ideas come from places where you think they might be the most unlikely. Then you're going to be constantly improving. Leadership strategy here is to act as a team and listen to the team members. And as a leader, you need to be more of the problem solver. That's what your job is. It's not to get in the way of your team's efficiency. It's to hire the right people, train them well, give them the tools they need to succeed, and then get out of their way. But be there to help them solve problems when they arise and they need some assistance in solving them.
Has the pandemic changed the way your team works?
Unfortunately, I don't know if it has changed the way the team itself, call it efficiency of the team, but it's definitely changed the way our team works. I mean, we work on a skeleton crew in our multiple offices. In some offices, they're still closed to one degree or another. We use a lot of Zoom calls, and we have Teams that we use as well. We do a lot less travel. So for all those reasons, it definitely has impacted the way we operate. Do I think we're ever going to go back to how we operated before the pandemic? I hope so, because I can tell you, and other leaders in our sector at least, and probably many others will echo this, there gets to be Zoom fatigue, and you're never as productive as you are when you are surrounded by your colleagues.
Do you still work in the office?
I do.
Let's talk about marketing. How do you source deals and capital, and do you actively market for either?
Whatever we do, we're always marketing. Anybody who tells you they're not is fooling themselves. How do we source deals? Well, I mean, we have a multi-tiered approach. Roughly 52% of our deals are found off market, and those are often found from our market officers and their team of analysts cold calling individual property owners who have properties that meet the criteria that we set for the properties and throwing in offers. We've thrown in over 200 offers over the last month and a half. And that's how we find a lot of our deals. It's through unsolicited offers. Another way is within the market, we have an incredible reputation. We do exactly what we say we're going to do, and we close deals at the prices we contract for. Brokers have a comfort level in knowing that not only are they going to do repeat business with us, but they're going to get their client the result that they want if they select us as buyers. It is marketing because it'll take you 20 years to build your name in the industry and one deal to screw it up. From that respect, we're always marketing to the brokers and to the ownership community that we're the right group to go to. If you want to sell, we'll pay you the best price based on our criteria. And if you're comfortable with that price, it's often one of the more competitive prices. We will do exactly what we say and you'll have certainty of close. In terms of investors, we absolutely market. We get in front of whether they be institutional, we have institutional sleeves, so pension funds, sovereign wealth funds, large family offices, in some cases small family offices, endowments, etc. As well as we have a high net worth sleeve where we have a very well-known name in the ultra high net worth world. And we're constantly getting in front of these investors, ensuring that they remember us, remember how well we've done for them or we've done for their colleagues, offering up the opportunity to invest with us. In many ways, we're marketing on all fronts.
Does debt play any role in your finance structure for your deals?
Sure, debt always plays a role. Maybe it's our Canadian roots. Although I live in Dallas, we have a saying that because many of the principals were born in Canada, we're more conservative. And so our average debt level, let's say across our funds, has been 58%. However, debt is still an important component in terms of yield. We're not a group that is ever going to over-lever intentionally. 65% will be the maximum that we'll take. It's still a key component. Most of the lenders we work with are life companies, large banks, some local banks, but we don't do CMBS. We don't take any mezzanine debt or pref equity structures. For us, debt is a tool, but it isn't the driver of your return.
Do you leverage inbound content marketing, and is social media part of your strategy?
Definitely, we do that. We put out articles, press releases. I'll give interviews such as this one. I'll speak on panels, as well as certain other senior members of our firm will speak on panels. We've won a number of awards. Do we use social media? Other than LinkedIn, I would say very, very minimally. And maybe that's because it's my belief and many of those in our business that we're, call it technologically behind the times, and that many of those who are within our sector aren't really on social media in the same way that maybe in other sectors. And so if you want to get out to the demographic that you're looking to reach in our world, whether they be an investor base or for name recognition with the real estate world, for the tenant world, then we use different mediums, and social media hasn't really been one that I could say that we've used successfully, but that may be simply because we're not doing it.
All right, now we come to the final question. What is one closing insight you'd like to share for executives targeting growth?
Envision what your growth is going to be, write it down, get your team to buy into it, and keep moving forward. It's really what it comes down to. The difference between dreamers and visionaries. Our visionaries will roll up their sleeves and actually turn their dreams into a reality, where a dreamer will simply dream it and not take the action. Growth is pain. It's constant pain. It's constant figuring out problems, and you have to love the problems that you're dealing with and know that you're going to succeed in the end of the day. If your end game is to be rich, you probably won't get there. But if you love what you do and you envision growth and know it's going to be, if you are very clear on what goals you want to hit and you work towards hitting them, most likely you're going to hit them.
Thank you for joining us today, Sean. We appreciate your insights.
Thank you for having me.
Thank you for listening. Please like and subscribe to get updates on our upcoming podcasts. Share the inspiration.